Welcome to a new Bitcoin Books video. Today, we are cracking open a really big one, maybe one of the most influential books in the entire crypto space, The Bitcoin Standard by Saifedean Ammous. Now, what's so fascinating about this book is its main argument. It says that to really get what Bitcoin is all about, you can't just start with Bitcoin. Nope, you have to go way back and understand the history and the very nature of money itself. So that's exactly where we're going to start.
All right, so let's just jump right in. Before we even whisper the words digital currency or central banks, the book poses this really fundamental question, one we don't think about much. What is money, really? And why do we even need it? To find the answer, we've got to rewind the clock, way back to the very beginnings of trade.
Okay, so imagine a world with no money, just direct trade, right? Barter. Well, you immediately run into this massive problem, and it's called the coincidence of wants. Let's say you're a chicken farmer and you need a new pair of shoes. It's not enough to find a shoemaker. You have to find a shoemaker who, at that exact moment, just happens to want chickens. I mean, good luck with that. It's super inefficient. And this is where money comes in. It's not some government invention. It's a solution that just emerges from the market. It's this one thing that everyone agrees to accept because they know they can turn around and trade it for whatever they actually want later. It literally breaks the chains of barter.
All right, so money solves the barter problem. And this is a huge but, not all money is created equal. I mean, not by a long shot. The book argues that the single most important quality, the thing that makes good money good, is its ability to hold on to its value over time. And this idea brings us to the absolute core concept of the whole book, the difference between hard money and easy money.
So, how do you actually measure if a money is hard? Well, the book introduces this really powerful but actually pretty simple idea called the stock-to-flow ratio. Think of it like this. The stock is all the stuff that already exists. Let's say all the gold ever mined in history. The flow is the new stuff that's produced this year. You just divide the big pile, stock, by the new trickle, flow. A super high ratio is what you want. It means any new production is just a tiny drop in the ocean, which is what protects the value for everyone who's holding it.
And this chart right here, it perfectly shows you why gold, out of everything, became the king of money for thousands of years. Its stock-to-flow ratio is just naturally sky-high. Why? Because it's really hard to dig new gold out of the ground compared to the enormous stockpile we've built up over centuries. Now, compare that to something like seashells. Sure, they worked for a while in some places, but the moment someone figured out how to just go to the beach and grab a whole bunch more, their value completely collapsed. The flow overwhelmed the stock. It's the classic easy money trap.
The book gives a killer historical example of this in action, the Roman Empire. For a while, Rome was thriving, and a big reason was its sound money, solid gold coins like the aureus. But then, the emperors got greedy. People like Nero started doing this sneaky trick called coin clipping. They'd shave a tiny bit of gold or silver off the edge of each coin, melt down the shavings, and mint new coins to pay for their armies and palaces. I mean, it was literally the ancient world's version of printing money. And guess what happened? This shift from hard money to easy money kicked off a death spiral of inflation and economic chaos that, as the book argues, was a major factor in the fall of the entire empire.
So this isn't just some ancient history lesson. This pattern brings us right up to the modern day. The book's argument is that in the 20th century, the whole world embarked on this gigantic, unprecedented experiment. We collectively decided to abandon hard money, to cut the cord to gold, and switch to a system of money controlled completely by governments.
And let's be clear, this is one of the most central and, pretty provocative claims in the Bitcoin standard. The author's view is that when we cut that final link to gold, which really got going around World War I, it wasn't progress. It was actually a massive step backward that unleashed all sorts of deep, systemic problems into our economy and even our culture.
Okay, so what exactly are these destructive consequences the book talks about? Well, it lays out a few big ones. First, you get chronic inflation, that silent thief that just eats away at the value of your savings year after year. Second, you get these crazy, destructive boom and bust business cycles. The book argues these aren't a feature of free markets, but are actually caused by central banks messing with interest rates. Third, and this one is deep, is a cultural shift towards what it calls high time preference. Basically, a live for today, pay tomorrow mindset that encourages debt and consumerism over long-term saving. And finally, it allows governments to grow and fund their projects not just with taxes you can see, but through the hidden tax of inflation. All right, so after painting this pretty bleak picture of monetary history, the book finally brings Bitcoin onto the stage. And it's super important how it's framed. It's not just presented as some cool new piece of tech, it's introduced as a potential solution to all those problems we just talked about. It's pitched as a return to the first principles of sound, hard money, just completely reinvented for our digital world. And it all starts with this one magic number, 21 million. That's it. It's not a suggestion, it's not a target, it's not an estimate, it is the absolute hard-coded final supply of Bitcoin, period. And this, according to the book, is the whole ballgame. It makes Bitcoin the very first thing in all of human history that has true, verifiable, absolute scarcity. You can't just stumble upon a new continent of Bitcoin, you can't invent a new technology to make more of it. 21 million is the final answer.
So you might be thinking, okay, but how is that number actually enforced? What stops people from just making more? And the answer is what the book calls Bitcoin's core innovation, its absolute stroke of genius, the difficulty adjustment. The best way to think about it is like a perfect thermostat for the new supply of Bitcoin. If more people start mining and try to create coins faster, the network automatically cranks up the difficulty. If people leave, it gets easier. The end result? New Bitcoins are created on a perfectly fixed, perfectly predictable schedule, no matter what. This makes the supply completely, 100% unresponsive to demand. Even if the price went to $1 billion tomorrow, you couldn't create it any faster.
So let's put this all on the table and see how it stacks up. When you compare Bitcoin's properties to the other two major forms of money, gold and government fiat currency, the book's argument is that its unique advantages really pop. You get this absolute scarcity that not even gold has, right? But you also get the effortless digital portability of fiat money. And then you get the killer feature. It does all this in a decentralized peer-to-peer way, which means for the first time, you can have absolute, total sovereignty over your own wealth.
So, given all that, what is Bitcoin's actual job in the world, according to this way of thinking? Well, the book is pretty clear it's not about buying your daily cup of coffee. That's not the main point. Instead, its primary role is seen as a sovereign store of value, basically digital gold for our modern age. Second, it's seen as an escape hatch for people living under governments with high inflation or capital controls. And third, it's a global settlement layer for really, really large transactions. Think banks or even nations settling accounts with each other, the same way they used to use giant bars of gold.
But wait a second, there's a giant elephant in the room we have to talk about, the energy use. This is probably the #1 criticism you hear about Bitcoin, right? Isn't all that electricity just being burned up, wasted on solving, pointless math puzzles? Well, the book tackles this head-on and argues, nope, not even close.
From the book's perspective, that energy consumption is a feature, not a bug. Think about it. That energy is the actual physical cost of creating security and scarcity in a digital world without needing to trust a bank or a government. It's what tethers the digital world to the real world of physics and energy. That massive firewall of electricity is precisely what makes the Bitcoin ledger so incredibly hard to attack, what makes it honest and unchangeable. You could say it's the price we pay for a truly trustless monetary system. And this really brings us to the final, massive question that the book leaves you to ponder. We've seen that for thousands of years, whenever people had a choice, the market always, eventually, settled on the hardest money available to it. So, if that long historical trend is any guide, what do you think that means for a world that now, for the very first time, has access to an absolutely scarce and therefore the hardest form of money ever created? And on that thought, we'll wrap up our look into the Bitcoin standard. For those who want to learn more, the link to get the book is available in the video description. If you found this content interesting, please subscribe to the channel and like it to help us reach as many people as possible. Thank you.